Hey guys, hope you and your families are well. What on earth did I learn studying 1046? As you can see down here, cup and handles that are currently in the chart model database. Well, that's the objective of this video. In about 5 to 10 minutes, I'm going to give you the highlight reel for what are the repeatable characteristics that I see in the best of the best, the creme de la creme cup with handles. I'm going to try and do that in about 5 to 10 minutes so you can then apply it to your own scanning. Now, if you would like to look at over 3,000 stocks in my chart model database, you can also do it for free. You just need an email address. There is a link in the comment section below, so you can have a 7-day free trial. You can study these for yourself. You can play around with our stock screen hero, then you can go look for these cup and handle type patterns too. So cup with handles, we're just going to look for the ones that are what I deem, yours truly deems, 5-star cup with handles, and we're going to be looking at the oldest ones first. So we're going to be going back to the 1970s for some of these. Now, what I'd also suggest is in your site settings, set it to 1 chart per row instead of 2. Visually, it's going to be much easier for you to be analyzing the charts, especially if you're on a tablet also. But I would just say one chart per row is going to be better for you, right? So cup with handles, let me start giving you the highlight reel. So what I've noticed, and I would say over 75%, when that handle is forming in the handle, you will commonly see VCP characteristics. So volatility will be contracting. So kind of the candlesticks will just, or bars, if you're using bars, will be getting narrower in terms of the real bodies, the spreads, the volume will be drying up. I would say 95% of those roughly, certainly within the 90% region, the actual handle is forming above all the key moving averages, whether that be, for me, the 1 hour chart, the daily chart, or the weekly chart. You're going to see more examples here on the daily chart. So daily chart, black line is 10 EMA, blue line 21 EMA, purple line 50 SMA, grey line 100 SMA, and the 200 is, or the red line is the 200 SMA. So you can see where the handle is actually forming here. It's above all of those moving averages. This you can then put into your scanning criteria to be looking for stocks above said key moving averages. Certainly the longer term ones, maybe like the 200 SMA, maybe you want to put 50 SMA in there as well. So that there is one thing to visually be looking for. Now this is something that's a little bit more nuanced. So obviously a cup and handle has there are two main parts to it, right? You have the cup part, you have the handle part. So as price transitions up and out the right hand side of the cup, then into the handle, look for bullish synchronicity. What on earth is bullish synchronicity? Bullish synchronicity is where you get a widening of the price spread. So you see like this bar in here, see how the bar is widening, and preferably those candlesticks and or bars open near the low and close near the high, and then volume is coming through greater than the 30 bar average. I just use the 30 bar average for whatever time frame I'm on to keep it consistent. So that there is the 30-day average for the volume, this black line here, okay? So you see how you get this increase in volume, bullish synchronicity, and then the tightness in the handle forms. Commonly in the handle as well, you might see a little VCP or a Davis box as well. So let's keep going through. They're two of the kind of main ones. Something else that you will see in the best cup and handle type patterns is in the handle, you'll see what I call trigger bars. What on earth is a trigger bar? So a trigger bar is an extremely tight bar. Tight bar, it could be a candlestick if you're using candlesticks as well, and the volume dries up significantly. It can oftentimes be the tightest bar, so the tightest range in terms of the real body of the candlestick, the overall range as well that you see within the base, and the volume should dry up significantly. You may also see that it's the lowest volume bar within the base thus far. So case in point, see here how there's extreme tightness coming through, and see how you get this bullish synchronicity bar beforehand, then extreme tightness. Look how the volume dries up over here as well. See how you get this rally coming through, and then it pulls down, little handle here. Look how the volume dries up. Really interesting. Now another point as well is on the relative strength line. Now my team is able to build out a free relative strength line. If you want to use it for free, it's on TradingView. If you search my name in the indicators, you'll find it, and it looks just like this wiggly line down here with some pretty blue dots on it. What on earth do those blue dots mean? The blue dots indicate a 52-week high on the relative strength line versus the S&P 500. Now you can change it from S&P 500 to the FTSE if you're trading UK stocks, to whatever index you are trading. So ideally you want to line up the stock to the index that you're trading. So if you're trading, say, French stocks, you'd like to load it up to, say, the CAC 40, or if you're trading German stocks, potentially the DAX, whatever. You understand the point, right? So ideally, let's just reverse engineer it. if you see 52-week highs in the base, so the stock isn't even breaking out, but you're getting 52-week highs in the base like you are here with CTS back in 1975, that is an extreme sign of strength. This stock is telling you it is extremely strong, and it's the proverbial basketball being held underneath water by the market. So the pressure of the market is pushing it down. When that market pressure is released, so say the market's maybe trending down, when the market changes its trend, this stock can kind of, that proverbial basketball can pop up and go. So 52-week highs in the base is a sign of basketball being held underneath water. Visually, that's how I interpret it. And then commonly you will see the best cup and handles, when they break out, there will be a 52-week high on the breakout day itself and or very soon after. So you can see that coming through in here. So we've got a couple of points already. Another thing is a cup and handle is fairly closely aligned with a VCP, or a VCP is fairly closely aligned with a cup and handle, whichever way you want to look at it, right? So quite oftentimes in the handle, you will see a VCP. So that is where the depth of the contractions are lessening each time. Preferably it's building higher lows, the volume is falling away. So you see here how you get your cup, and then remember what I said earlier about that bullish synchronicity as you transition up and out the right hand side of the cup. See that bullish synchronicity coming through here. See the consistency of volume, and then there's about 1, 2, 3 contractions, and then see how the pivot is actually setting up pretty much above all the key moving averages, 10 EMA and 21 EMA, if you're trading more so the quicker momentum stocks in the market. Whether that be, I wasn't trading in the 1970s obviously, but whether you were trading in the 1970s or you're trading in the 2020s, it's the same point. 10 EMA, 21 EMA for where those pivots are developing, really, really important indeed. So let's go through some others. So this one here, this one's a little bit different because this may have been an IPO actually here. So this here is an IPO, and then it builds out its cup and then the handle. And commonly you can see as well the 50 SMA is important. So as much as I was just blabbering on about the 10 EMA and the 21 EMA, 50 SMA can also be very important as well. Certainly if you're looking to use, say, the 10 EMA, the 21 EMA as trailing stops for part of the position. But as you see here, see how the price starts getting short-term extended here away from the 10 EMA. That's where I invariably go lower the bar, lower the bar, lower the bar to choke it off. So if it's short-term extended, if the stock's gone on a big move, which this one has gone up a couple 100% from 62 cents, this will be split adjusted no doubt up to kind of $1.80. But you see here high volume diminishing upwards result, that there is a Wyckoff concept. So lower the bar, lower the bar, lower the bar, choke it off like that. But you could also be, if the pivot is setting up, and this can kind of be a pocket pivot as well. I may do a pocket pivot videos, you'll see some of those in the model database. But you see how you get this perfect trigger bar here. You see this, it's a really tight inside bar. So what is this? This is indicating there's no more supply coming to market. I can create a much more favorable risk versus reward trade. Look how the volume dries up there perfectly, and then see how it sets on the 50 SMA, and then it doesn't close until the 50 SMA over here. So again, if it's kind of setting on the 50 SMA, I know some of the cancelling guys use the 50 SMA as a trailing stop. I would rather think about using the 50 on part of the position if the pivot was kind of setting up around the 50 SMA. Hopefully that there makes sense. But on the bigger bases, cup and handles, you can get the 50 SMA there as well. Let's finish off with this one, as I think I've kind of covered the main points. I don't want to make this video kind of extremely in depth. I just want to give you the highlight reel of what do I see the best of the best cup and handles do consistently. So here you have a cup, and then here's the handle over here. Now, a couple of things going on in the cup, which is another point that you can be looking for. At the bottom of the cup, look for evidence that large operators are stepping in. So there are 2 main candlesticks I would look for that. I would look for shakeout demand tails. So this here is a shakeout demand tail, and it's on the highest volume. Large operators, so think of the Warren Buffetts of the world, the 2 things they require above everything else is liquidity and perceived value. Liquidity and perceived value. So when you see these shakeout demand tails, and this is where, without getting really complex, a Bayesian way of thinking. What on earth is a Bayesian way of thinking? A Bayesian way of thinking is when you're updating your decision-making process when new information becomes available. Just like life happens in trading as well. New information is becoming available. We have to make decisions to the best of our ability with the information that we currently have. So when you are then looking back and you're going, well, imagine you were looking at it in here as that handle is forming. You're looking back and going, wow, hang on a minute, shakeout demand tail, largest volume bar, and it turns out to be the bottom of a potential cup and handle type pattern. And then remember what I was blabbering on about earlier, strong rallies up the right hand side of the cup. Here's that strong rally, good volume coming through, price pulls back. What do you notice about this pullback? Well, there isn't much volume, and a lot of these bars have shakeout demand tails, and the real bodies and the spreads are pretty tight spread candlesticks on low volume indicate there is little supply coming to market, or there is absorption of supply going on. And then what do you see here? See how as it then powers out this cup and then into the handle, what do you notice? 2 very powerful bars here. bullish synchronicity. Look at the volume coming through. Look at the widening of the spread. Where do both of these candlesticks open? They open on the low of the day, they push up. Open on the low of the day, push up. Demand is there. Demand is present, and it is present in high levels. Why? Look at the volume. It's 2 times, if not 3 times, the 30-bar average. Then see this pull back in here. Multiple tight candlesticks on low volume indicate there is very little supply coming to the market. So this is then trigger bar, trigger bar, trigger bar, volume dries up. Powers out of this base. 52-week highs come in soon enough, and although there's not a 52-week high on the breakout, see how the RS line is actually turning up. So whilst this handle is forming, so then think about this in the context, I don't know why I did that, think about this in the, I'm like saluting, think about this in the context of the market as well. Now again, I was not trading in 1977, but it's the same principles, it's supply and demand. So you see how the price, the stock is actually pulling back in here and forming this handle as it pulls into the 1021 EMA. Look at the RS line. The RS line's actually going up. So what do you think the market was doing in January of 1977? The market, say the SPYs, so the S&P, so the Nasdaq comp, was actually pulling back to a greater extent. So this stock here, NL, is pulling back, but it's pulling back less so and very constructively relative to the index, whether that be the Dow, whether it be the S&P, as this RS line is set to, whether it be the Nasdaq comp. So the RS line is actually improving. So this is, it sounds a little bit perverse, but stocks can pull back in a bullish manner. It's the characteristics, it's the context of the chart pattern, it's the context of what is the stock doing, the characteristics of the candlesticks, what is the volume doing, what is the relative strength doing, what is it doing in comparison to, say, its sector, ETF, its group, its brother sister stocks, and or the index as well. This here is a very, very, very good setup indeed. So I've probably waxed lyrical for long enough about cup and handle type patterns. I'd encourage you, there's a link in the comments section below if you want to go and look at these for free for 7 days, guys. So thank you very much. I appreciate the support on the channel, and I will see you in a future video.